welcome to this month's Financial Markets Update. A little bit late this month due to Easter. I hope everyone had a nice relaxing time over the days off. If we look at investment performance throughout March, certainly equity markets continued their upward trajectory and had a really strong end to the quarter. Our local market was up a couple of percent, and we saw global markets up a similar amount over the period. And if we actually looked at the first quarter of this year, we've seen some really solid results, both from domestic as well as global equity markets. We compare that to the defensive side, fixed income markets, and actually they were negative over the March quarter. Both domestic and global bond markets were lower, principally on the back of a very difficult month in February. March continued that sell-off, particularly in global markets. Our local market was moderately higher in terms of fixed income performance. We continue to see bond yields move higher, and we expect that, as we've spoken about previously, to continue throughout the course of 2021. And this is going to be a drag on the performance of fixed income markets in terms of overall investment performance. We don't expect the sell-off that we saw in March to continue at the same pace, and we had some slight range trading throughout the course of March. But as I said, we do expect yields to be higher from where they are today by the back end of calendar 2021, and certainly if the rollout continues at pace and we start to see the economic environment continue to improve, we think that'll definitely be the case. For that reason, we remain certainly well underweight our allocations to fixed income across our portfolios and continue to do so. We think the recovery we can see really on the data front, and we saw some really quite encouraging data points throughout the course of March and as well as the first quarter more generally. We think that's going to be positive for equity markets by and large, and we're very happy to maintain our overweight position in equities relative to fixed income as we move forward, and we don't see that changing anytime soon. Central banks continue to reiterate a very accommodative monetary stance. We're not seeing inflationary expectations move significantly higher throughout the first quarter, and we don't expect that to be the case as we sort of head through to the second half of 2021. So the environment, in our view, remains very conducive for equities to remain, as I said, a real mainstay in regards to investment market performance. Doesn't mean it's going to be all plain sailing, and certainly we will have challenges along the way. But as I said, from our perspective, the way that we're looking at valuations, where we see the opportunity and the growth outlook for earnings, we certainly, as I said, remain very constructive on the equity market outlook, and we're reflecting that in our asset allocation framework. Equally, it's not all just equities. We are looking at growth alternatives and increasing our positioning in parts of the market, whether it be private equity or longer duration assets such as infrastructure, as well, to be able to pick up on some of those longer term growth themes that we're seeing in financial markets. As always, if you have any concerns or queries about the portfolios, you'd just like to discuss any issues, please feel free to reach out to anyone of the team. And as I said, we look forward in catching up next month. Thanks and bye for now.